The summer is now officially over and the Irish commercial property market is gearing up for what promises to be a couple of very busy months ahead as the traditional autumn selling season officially commences. The focus over the quieter summer months has been getting various transactions across the line and preparing assets that will be offered for sale over the course of the autumn. Activity continued in all sectors of the market over the summer months, with several transactions having gone to legals during July and August. This will boost transactional activity in the third and fourth quarters of the year as these transactions complete. In the offices sector, following a record first half to the year when more than 150,000 square metres of office accommodation was signed in Dublin, activity has continued throughout the summer months, with several leasing transactions progressing to legals during the summer. A significant proportion of these transactions occurred in the suburbs of the city, which is interesting. Although few new requirements materialised in recent months, this is symptomatic of the time of year, and we do expect to see some sizable new requirements to be activated in the autumn. Speculation about Brexit-related activity, which has added a welcome layer of extra demand in the Dublin market during 2017, continued to abound over the summer months. In recent weeks, the Irish Government have formally pitched to the European Banking Authority and the European Medicines Agency to encourage them to locate in Dublin, and interestingly have formally committed to provide financial assistance to help them to underwrite rental costs should they opt to locate here. As the appetite from occupiers for flexibility gathers pace, we are beginning to see greater demand for flexible office solutions and co-working space, a trend that we expect will escalate over time. In recent months, we've seen specialist providers such as Huckletree, Regis and Iconic Offices expanding their footprint in the Dublin market, and we expect the well-known provider WeWork to establish a presence in Dublin in due course. Prime office rents in Dublin remain stable at €673 per square metre at this point. Having achieved take-up of more than 120,000 square metres during the first half of 2017, activity in the industrial and logistics sector in Dublin continued throughout the summer also, despite the severe supply-demand imbalance that still continues to prevail in this sector. There has been an increase in Brexit-related inquiries in the industrial sector in recent months also. As we had anticipated, with prime industrial rents having now risen to levels that justify new development and evidence of strong demand from end users, there has been an escalation planning applications for new industrial schemes over recent months, and we've also seen the welcome commencement of some speculative industrial development in North Dublin over recent months. Demand from developers and owner-occupiers for well-located industrial land has also increased lately. Competitive bidding on industrial sites that have recently been offered for sale, including 10 acres at Kingswood in Dublin 24, which went sale agreed in recent weeks, are evidence of this. We recently launched the sale of Liffey Park Technology Campus in Leixlip in County Kildare, one of the largest and best serviced high-tech facilities in Ireland. The facility comprises approximately 136,000 square metres of manufacturing, clean room, storage, distribution and office accommodation on an overall land holding of over 194 acres. This property has generated considerable interest over the summer, with bids expected to be invited over the coming weeks. Prime industrial rents are now €99.50 per square metre, up 6% since the beginning of the year. Retail sales volumes in the Irish market are up about 7% year on year, excluding motor sales, as consumer sentiment continues to improve against a backdrop of strong employment generation and significant price competition. Good retail sales activity continues to support occupier demand with prime retail pitches, although retailers are increasingly strategic about their entry, expansion and relocation activity of late. Several high-profile lettings were agreed over the summer months, including a number of significant lettings in Hammerson's Dundrum town centre. As retailers gear up for the autumn season, we expect to see greater focus on improving multi-channel strategies. Indeed, according to Retail Excellence Ireland, Irish consumers spend approximately €850,000 per hour online, 70% of which goes to international retailers. This is an obvious loss to the Irish Exchequer, particularly against a backdrop of weaker sterling at present. It remains to be seen if there will be any relief in the forthcoming budget to ease the plight of those retailers that continue to face trading difficulties in the current climate. Prime retail rents remain stable at present, although we do expect to see some uplift over the coming months as new transactional evidence emerges. According to MSCI, their Irish index shows that Irish commercial real estate achieved a total return of 2.1% in Q2 2017, with returns higher than 10% on an annualised basis. This is almost twice the level of return being achieved in the UK market in the same period. Investor demand for prime opportunities therefore remains strong, constrained only by a shortage of investment opportunities and in particular a scarcity of large lot sizes. With relatively few prime investment opportunities available in the core Dublin market relative to recent years, we are now beginning to see some investors focusing attention on other cities such as Cork and Galway. We also continue to see demand for forward funding opportunities. The summer months were reasonably quiet, with few assets formally released for sale, although this is now set to change as the autumn selling season officially commences and many new assets are brought to the market. Several sizable assets are due to be released in the coming months, including some high-profile office opportunities and the Square shopping centre in Tala in Dublin 24, which is likely to be of interest to many investors. Negotiations are continuing on a number of assets which were released over recent months, which bodes well for investment spend in the second half of 2017 if these transactions complete as expected in the third and fourth quarters of the year. Prime yields in all sectors remain stable at this juncture, although we do expect to see some tightening in yields over the course of the coming months as new transactional evidence emerges, particularly considering the price differential between Dublin and other European capitals at present. Both domestic and international investors continue to seek out investment opportunities in the Irish market. Much of the focus in the development land sector over the quieter summer months has been on completing transactions agreed earlier this year and preparing assets that are to be offered for sale during the autumn months. There were very few new sites released for sale during July and August. We do expect to see a notable increase in the volume of sales activity in the development sector in the second half of the year, following a relatively benign first half when sales for the most part were relatively small in scale. In a significant move, the Irish developer Cairn Homes recently took a listing on the Irish Stock Exchange to widen its investor base, and there is speculation about the launch of another listed vehicle that will focus specifically on land and development opportunities. Demand for development is particularly strong at present, considering the supply-demand imbalance prevalent in many sectors of the market, most notably in the residential sector. The development community are now eagerly awaiting the detail of the review of the Department of Housing's Rebuilding Ireland framework document, which is due to be released by Minister Eoin Murphy later this month. There may be additional measures announced in the forthcoming budget to stimulate the delivery of much-needed housing. It is interesting that the UK government recently embarked on a review of their Help to Buy scheme, which could see it wound down before its scheduled end in 2021. We could well see a similar review of Ireland's Help to Buy scheme in the forthcoming budget next month. With several large sites and development land portfolios expected to come to the market over the coming months, a busy autumn season is certainly in prospect for the development sector of the market. A number of hotel and licensed transactions are now in legals or at preferred bidder stage, which bodes well for a good volume of transactional activity in this sector of the market over the remainder of the year. The most significant property launched for sale during the summer has undoubtedly been the 4-star Carton House Hotel, Golf and Leisure Resort, which is guiding €60 million and which has attracted a significant amount of international interest in particular. Best bids will be invited on this prestigious property later this month. A number of high-profile hotel properties are due to be launched for sale over the coming months. Those in Dublin are likely to be of particular interest to the many international brands seeking to gain a foothold in the Irish capital. Hoteliers have reported good trading conditions and impressive performance statistics over the summer, with tourist volumes particularly strong. Indeed, visitor numbers to Ireland this year are expected to surpass 8.8 million. According to STR Global, Dublin RevPAR was up 7.1% in the year to July, with national figures up 10.4% in the period. Although visitor numbers from the UK are down year on year, this has been more than compensated for by an increase in tourist volumes from the US and mainland Europe. Dublin's occupancy remains high relative to other locations, although this will alleviate in due course as new hotel supply starts to feed into the system. Hoteliers are anxious that the 9% VAT rate be retained in the forthcoming budget. The 9% VAT rate has proved very supportive of this sector over recent years, and it's particularly important that it be retained until there is more certainty on the likely impact of Brexit on this sector over the next couple of years. Demand for good Dublin pubs remains strong, although buyers do remain frustrated by a scarcity of stock being released for sale. In recent months, Sandyford House and Sandyford Dublin 18 sold for a reported €1.7 million. Nash's Pub in Dublin 8, including 2 floors of modern office space and a penthouse apartment, sold at auction for €1.55 million, while the well-known Boland's in Stillorgan sold for in excess of the guide price of €1.4 million. Transactional activity in the Cork market was quiet during the summer months, although we expect to see an uplift in activity now that the traditional autumn selling season has commenced. As has been the case in Cork for many years now, some of the transactional activity in the investment sector is occurring off-market. A scarcity of investment product in the Dublin market and the considerable price differential between pricing in Cork and Dublin has fueled a notable increase in appetite from investors over recent months, with several new names considering investing in the city. The biggest challenge continues to be a scarcity of core product to satisfy investor demand, particularly considering the lack of new stock in the Cork market. We therefore expect to see the appetite to forward fund new buildings continuing to strengthen over the course of the coming months. Although Cork has not yet benefited from specific activity that's Brexit related, there are several active requirements for office accommodation in the city at present, which is encouraging. In total, according to our research, there's demand for more than 20,000 square metres of offices in Cork at present, which is encouraging. The autumn selling season has now officially kicked off, and there's no doubt but that a couple of busy months are ahead for the Irish commercial property market. To download our full bi-monthly report, please visit the newsroom of our CBRE Ireland website at news.cbre.ie.